Any money under your bag is not productive. If you take it out and begin to spend, you have to pay someone for having lunch. The person takes the money and pays someone that supplies probably food. The person that you bought the food for is paying someone at the farm, right? Paying the fuel. So it goes on. It's called the multiplier effect. That multiplier effect is sort of stifled because we do not have free liquidity across board. A lot of these monies are being held up. So the whole idea is to open up the economy and have stronger tightening process.
Hello, and welcome again to another episode of Advocate Distinguished Guest Series. My name is Uchechi Ibeku. Today we're going to be discussing the new Naira. We're going to be talking to Mr. Olusesan Ajayi, who is the Chief Risk Officer of Lotus Bank Limited. Sheson, thank you very much for joining us in this interview, and we look forward to an insight. Thank you. So we'll just go right into the interview. And Lotus Bank provides non-interest financial services to customers. Can you tell us a bit about what your day-to-day as a Chief Risk Officer entails?
Okay, thank you for the question. So basically, at Lotus Bank, we have specialized services. Specialized services in the fact that non-interest banking is an evolving part of the market. So the difference with conventional banking is that we finance the underlying assets of the transaction. So if your firm or you want to buy a car, instead of giving you the money to buy the car, we'll purchase the assets in our name and lease it to you, and you pay us rentals over a period. So instead of parting with value, we actually finance the asset in question, which is a more tidier and more healthy form of banking, if you might ask me, because one, it eliminates diversion. Number two, it ensures that the purpose of the facility is what it's being used for, because it can be diverted to other uses. So for me as a Chief Risk Officer, I am more a forward-thinking Chief Risk Officer, because people see risk management people as very antagonistic, that
killing the deals.
They kill business, but I see myself as an enabler. So because I tell people when I have conversations like this, is that if there is no business, there's nothing you can antagonize. You can only enable when there's a platform. So if the business does not grow, you gradually are losing relevance. So we are like partners. I always liken it to a popular footballer, N'Golo Kante. N'Golo Kante plays for Chelsea. Used to play for Juventus or so, I can't remember now. His role is to give critical passes to the strikers to score. If N'Golo Kante doesn't play, most times the strikers never score, because he is the one that supplies those passes for the strikers to score. So I see risk management, or the CROs, as the N'Golo Kantes of the financial institution, because it's important to be a supporter, a partner, an enabler, because partnership is the new innovation. If there is no collaboration, it stifles growth. So for risk managers, we look at the areas where it can be consequential impact to the bank in terms of financial loss. We mitigate those losses. We help people equip themselves in terms of knowledge, in terms of capacity building, in terms of value add, because you can't give what you don't have. So as risk managers, it's critical for you to be extremely knowledgeable, to read and understand every area of the bank, because any loss of fund to the bank is a key risk area. So you have to mitigate those losses by ensuring that the right platforms are put in place. So that is what we try to do. And so far, we thank God, it has helped the institution. The era of armchair banking has gone, because now fintechs are even competing with banks. Some fintechs are even more profitable than banks. They have more capital base than banks. So you have to be continuously innovative. So you have to think of ways that you can create value to the customers. So if you block business, you've eroded value. And if you erode value, you reduce the net worth of the business. So you have to find ways of growing the business, so that as the business grows, you secure your position as risk officers, and also the overall objective of the institution is to remain profitable and add value to the economy as a whole.
Okay. So you mentioned a bit about your customers. Let's talk a bit about CBN's financial inclusion, and they have a target of 95% by 2025. What are the sort of products that a non-interest bank has that can aid CBN in reaching those targets?
Okay, so basically for financial inclusion, there is the unbanked and the underbanked. The unbanked are those that don't have any form of financial services. The underbanked are those that have very little financial services that you can scale up on. Technology is very important in this area. Telecommunication is also very important in this area, and also sensitization is very critical in this area, because if you are trying to onboard the unbanked, you need to reach out to people in very remote locations that might not even have a brick and mortar branch. How do you bring those people into financial services? You now have to be innovative. Do you want to use the string code, which is the USSD code? Do you want to use the telecoms company? Do you want to use agency banking, which is working? Do you want to use QR code? But as much as possible, one of my friends always says, keep it simple. You need something that is very simple, very minimalist, that can impact the people that don't have these services. Because financial inclusion is not about Lagos and Abuja. Because that's most people see Nigeria as Lagos and Abuja. There are places that
and Port Harcourt,
in this country, probably Port Harcourt, that you will be shocked that there are no roads, there's no pipe-borne water, there is no form of infrastructural development in those areas. How do you reach out to those people? You need to be innovative, like I said. Everybody now has a phone. The fastest way of onboarding people into the financial basket is by telecoms, because it has a very wide reach. As we speak, the number of the bank population of Nigeria today, from MBS statistics, is about 40 million.
Wow.
40 to 50 million. As a country, informally, we are well over 200 million. So we are seeing that we are just scratching the surface. Do you understand? 1/5 of the entire population, which is really not it. So if CBN is trying to achieve 95%, a lot of work has to be done. First of all, we need to get our data right. We don't have data management, proper data management in this country. The BVN has done a fantastic job, the NIN too has done a fantastic job, but it needs to spread out. We need to have a thorough census of people in this country, because you cannot project without data, without numbers. If you don't even know how many we are in the country, what are we projecting for? How do you know 95% of what? So we need a census count. We need to know how many people. If it's not even accurate, at least you can get a ball-eye-park figure of maybe at least 80%, which is fair enough. Rule of thumb is you've done well above the average figure. So those things are critical, because we need to have a statistical data of how many people are in this country. Then from that data, we can now mine it down and say, okay, we're trying to achieve 95% of 200 million, which comes to about 170 something million. Then you begin to plan, you begin to deploy resources, you begin to strategize, you begin to articulate. So for us in Lotus, we are looking at agency banking, we're looking at technology, we're looking at QR code, we're looking at third-party banking, that is reaching out to people in most of those very rural areas. You'll be surprised the population in some of these areas are much more than Lagos. Lagos, they say, has about 21 million, which is a huge population. When you go up north, you go to the south, you go to some of these rural areas, if you aggregate the figure, it's well over 60, 70 million. So the people in the cities are a lower fraction of those people in those areas, because those people don't see the need for banking. But as you expand, you want to send money to your mom in the village, you want to send money to your friend in a very obscure location, you don't need to start looking for the closest bank to run to. You can do it with your phone, right? You can do it with a string code. You can do it by walking to an agent somewhere on the road, and you send the money to the agent ensures the person gets it. So it's like a multiplier effect, value chain. You've added value to the agent makes money, you send money to whoever you're trying to send to, the aggregator that creates that platform makes money, and the economy grows. So are the low-hanging fruit strategies to make financial inclusion very, very effective. We're empowering these sectors I mentioned so that they can reach out to the nitty-gritty of the economy, because it will help us know as a nation where we are in terms of liquidity, in terms of number of people being banked, in terms of tracing informal money that can be used for nefarious activities, and creating a wholesome practice as a country.
Okay. So just over a year ago, in October 2022, the CBN introduced the new the e-naira, right? And it's been on for over a year and 2 months thereabouts. What do you think? What are your thoughts on the e-naira and how well it has helped non-interest banking? What are your thoughts in that as regards to non-interest banking?
Okay, so the e-naira is a wallet-based system for carrying out transactions. The emphasis is to reduce physical cash for means of transactions. So it's trying to ensure that each Nigerian has a wallet that if I want to transfer money to you now, I will just move money from my wallet and send it to you, and you can take advantage of the money in the wallet to do transactions with it based on the counterparty that has the wallet. Or if I want to send money to my sister in the village, she also has a wallet. I can send the money to her. Maybe she's in Naman, Karuda, in Katsina or somewhere. She gets the Naira into her wallet and she can use that money to transact because the other person she's going to buy something from has that wallet as well. So it's like an aggregator, a platform that we can use to transact financial transactions. It's a wonderful idea for financial inclusion, but when you ask a lot of people, if I ask you now, are you registered on the e-wallet?
No.
I'm sure if I ask my friend over there if he's registered, I'm sure the answer to is no. The idea is novel, but you also have to deal with the cultural sensitization of the people you are dealing with. How tech savvy are we as a nation? If you talk about Lagos, fine, maybe a lot of people want to do it, but when you move to Akure, Ilorin, and some riverine areas, how do you get those people to be onboarded on the e-naira wallet? Because as we speak, when they check the number of people that are on the e-naira wallet, I think it's less than 1 million.
Oh wow!
So
yeah.
It's well, but they're not on it as well. But it's actually a fantastic platform. But what I'm trying to say is that we need to sensitize people on the benefits and also let them know that it's not something that if you put your money on it, somebody might hack into it, because it's very secured, a very secure platform, and it's very innovative. So if you have that, instead of bringing out cash or looking for your card to do a POS transaction, you can just log into your e-naira account. You have 20,000 there, and transfer money to somebody's e-naira account. The person takes hold of the money there, goes to a shop, buys, the shop owner transfers to the shop owner. Then the value chain goes on like that. So to take time to sensitize people, but it's a fantastic idea, and I just believe that there should be more education around it. Let people understand the benefits, the merits, and it's efficient, because you can carry out transactions seamlessly and in turnaround time in maybe 2 minutes. Instead of going somewhere, bringing out money, waiting for change, so it's a good idea.
So the e-naira sort of, what your explanation sort of devolves into my next question, which is about the introduction of the new Naira notes. Just last month, the CBN governor had announced the intention to introduce new Naira notes, and some of their reasons were that they wanted to rein in the amount of Naira notes in circulation being more than what is in the vaults of the bank. They wanted to stop criminal nefarious activities being used by, this money is because they are not in the bank and they cannot really be traced. And then they wanted to promote financial stability. Now, to a layman, just talking to me, I could understand how you would want to use the redesign of Naira to eliminate hoarding. But how does redesign of the Naira, how does it help you to achieve financial stability, and how does it check counterfeiting of the Naira?
Okay, so when you have excessive money in circulation, it creates a form of inflation because you have so much money chasing very little goods. And for proper liquidity management, CBN from time to time mops up excess liquidity in the system so that you can balance the fiscal sector of the economy. So there's not too much money in the system chasing very few goods. So that balance is only achievable when you have an idea of the amount of money in the system. So there's the M1 money, there's M2 and M3. M1 is cash that is in circulation that you can account for. M2 is cash in circulation and in investments, probably federal government bonds, books, treasury bills. Then M3 is the two I mentioned, then very large deposits that are maybe in the hands of very few
individuals.
Yeah. So for you to be able to monitor from M1 to M3, you have to have a proper monetary policy that can help you take decisions on knowing how much liquidity you have in circulation. As we speak now, CBN does not have that data. because a lot of M1 money are under the beds of some people. If you saw some things that you saw Oceanic Bank, a bank I worked for, well, a bank like Oceanic many years ago in 2010, and you are seeing those notes coming out to the banks. People are trying to pay it in. So it tells you a lot about the psyche of we as a nation. Yeah. Why are you hoarding notes under your bed? That money should be put to work so that it can add value and you could circulate in the economy and have a multiplier effect of stimulating productivity. Such things will not work if CBN did not take this drastic move. It's a good idea. Also bearing in mind that it's an election year coming up, it can be a way of also reducing any form of vote buying, because when you know that these monies are going to be useless anytime soon, nobody will want to collect it from you. You have to pay it into the bank. And the ones that are coming out, CBN is allocating them in tranches, on a need basis. Do you understand? So you really do have to be on the e-naira wallet or on a wireless platform to do financial transactions, maybe, or a payment platform, maybe NIP or NAPS or NEFT, because money in circulation will be greatly reduced. So incidences of seeing people in parties spraying and might not be so frequent from next year, because those circulation of those notes will be on a very stringent basis. So there will be a lot of thoughts that goes into it, a lot of empirical statistics to know whether these nairas or these funds should be pushed out there and what are they going to be used for. What CBN is trying to encourage is that we want a paperless society. We don't cashless society. We want people to leverage on those platforms to carry out financial transactions. And it's achieved a lot of results in this part of the world. Lagos, Abuja, the major cities in Nigeria. But as the naira has been, sort of taken back in and new ones being printed out, since availability will not be as much as before, you are constrained to take advantage of those channel points. So what are those channel points now? There's the POS machine, there's your internet banking, there's the e-naira platform, there's the wallet platform, and also the fintechs will benefit greatly from this because most of their processes are based on technology.
Already, yeah.
So it's a way of, creating a lot of value in terms of reducing the emphasis on naira, having people store up money in vaults and under their bed, because any money under your bed is not productive. If you take it out and begin to spend, you have to pay someone for having lunch. The person takes the money and pays someone that supplies probably food. The person that you bought the food for is paying someone at the farm, right? Paying the fuel. So it goes on. It's called the multiplier effect. That multiplier effect is sort of stifled because we do not have free liquidity across the board. A lot of these monies are being held up. So the whole idea is to open up the economy and have stronger tightening processes around our monetary policy. It's a fantastic idea, to be honest, and with time, the benefits will be seen clearly, because when you reduce unnecessary liquidity in circulation, it eases inflation, because you only spend what you have. There's no room for unnecessary spending. So that also creates a disciplined economy, and you don't have too much money chasing very few goods. And those goods are not available, cannot be used to be purchased with excess money in circulation.
So you've sort of answered the question, my next question, which was going to be how hoarding of the naira will affect inflation and will render CBN's monetary policies ineffective. And you've answered it very well. So thank you very much for that. So as a CRO, how do you think that the issuance of the e-naira, how do you think it's going to impact on your customers who are not in the urban areas but are in the rural areas, who may find it challenging to deposit? You've mentioned it, you've talked about it a bit in our conversation. So how do you think it's going to affect those ones who are not able to pay in those monies into the bank before the deadline of 31st of January 2023? The old women who tie their money in their wrappers in the villages and those kinds of things. What do you think will happen to your customers who are in that category?
So for us at Lotus Bank, I can only speak for the institution I represent. This is where agency banking becomes very critical, because CBN has given banks the liberty through their agents to collect these monies from people in such locations, and they will bear the costs.
Oh, right. CBN will bear the cost,
yes,
huh? Oh, okay.
Meaning that these people can now send the money through their agents so that they can pay in the money into the system. Because there's cash handling charges. For cash handling charges, CBN has stopped it with the collection of the old notes, so that people can bring in all their money. Before there were limits for individuals, that's 5 million, for corporates it's 10, except you have approvals to do more. Now you can bring in whatever amount. You still have to declare the source of the money anyways. But what I'm trying to say is that these monies are coming in and there's no charges on it. So we are leveraging on agency banking to go, because agent banking is innovative in the sense that there's a framework for CBN. It's called SANEF, Shared Agency Network Expansion Framework. That framework reaches out to all the local government areas in the country, 774 as our last count, except it's increased, I'm not too sure. So this framework has presence in these areas, and it empowers agent bankers to go out there and operate in all these areas with minimal requirements for registration. So it has empowered people to even have a source of living. So if anybody living in any of these areas that does not have access to a closed brick and mortar bank, you can easily reach out to the agent bankers, which we've done. We spread them to a lot of areas. For us, we're a regional bank, so we only have presence in 2/3 of the federation. Those areas we have presence in, our agent bankers have moved en masse through technology, through human means, through telecommunications, to onboard most of the monies that are with these people, so that they can bring it into the formal sector and bring it into the bank. And the question now is that how will they operate when the new monies come and it doesn't get to them? So we also have to sensitize them on how to use the various channels of payments to carry out their transactions. So it's interesting, very interesting times for next year. It's going to improve the payment market, especially for Nigeria, and it's something that will open up the economy to a lot of opportunities, right? Because of the innovativeness that is around the structure that the CBN is trying to bring out in terms of the e-naira, in terms of payment platforms, in terms of agency banking, in terms of payment service banks. I'm sure most telecoms companies have payment service banks now. They can't lend, but they can pay. So that payment is a collection process. You make fees on collections on. I want to pay XYZ 10,000. Okay, you can pay her 10,200.
200 will cost to them.
So they aggregate on volume. So it's slim margins or large volumes. And as we grow, those are the things that will help the economy.
So from what you said so far, you obviously believe that the new Naira notes are going to aid financial inclusion. Yes. You've mentioned a bit about that in our conversation, but can you just highlight some of those things, that the reasons why you think that these new Naira notes will aid financial inclusion? For the new Naira, in terms of financial inclusion, it might be business as usual. The only way it will aid financial inclusion is because there will be less of it in circulation. So the alternative naturally is to look for other means of payments, which has been provided by the Apex Bank in terms of regulation. So there are several payment platforms now. Several. You can use the fintech, you can use e-naira wallet, you can use the bank, you can use microfinance bank, you can use the PSBs, those are payment service banks, you can use the telecoms companies. So there are several. So the emphasis is on having less emphasis on Naira notes, on cash, and start transacting through borderless payments. Those borderless payments need to be activated through ways and means. The ways and means are some of the things we've been talking about for the last 20 minutes, and that's how it will flow. Okay, and so just for us to kind of wrap up this session, towards the end of last month, the CBN unveiled the new Naira. And there were lots of comments about it and people's expectations versus the realities and all of that. So what are the recommendations that you think you can prefer to the CBN on how to ensure that this new Naira policy and the rationale behind it is successful?
Number one, sincerity of purpose, that it is meant to carry out what it's supposed to achieve. So it shouldn't be like a witch hunting exercise. Number two, thorough sensitization to the people to let them understand the need for it. Some people have been making jokes that it's colored notes, paper. There was one particular one I heard that really got me laughing. Colored notes and this thing that they do on PowerPoint. So they were just saying different things, but the whole essence of money is a means of exchange. And if it's not going to be through cash, it has to be through any means that will be efficient and get to the intended user. So that should be the major focus, because with what has come out now in terms of statistics, the amount of money that has come into the formal space since the announcement came out is well over, isn't it 100 billion or so?
Yeah, oh my God.
So that's a lot. It could be existing money, but it's still a lot, because it shows that if we've been seeing between 40 to 50 in terms of payments in the past, and we're seeing 100, 150.
In the space of a month.
Yeah, a lot has happened. So all those monies leaving wherever they are and going into a formal space will create a value chain for the economy, because these monies have to be spent, and it will be spent on things that will benefit you and I, goods, services, and intellect. So it's very critical. It's a fantastic policy, but the sincerity around it should not be compromised, and it should be enforced in a way that people will see the value around it and the consequential impact on the economy.
Finally, can you share with us your outlook on the Nigerian economy in 2023 as it relates to Nigeria as a whole, and in particular the financial sector?
2023 will be very interesting. It's a political year, so there will be a lot of emphasis on who's going to be the next president, which will in a way affect the fiscal side of the economy, because most policy and governance areas will be channeled towards the election. Subsequently, with CBN increasing MPR by 100 basis points to 16.5, MPR being the base rate at which you lend to banks, it means that interest rates will shoot up, and that will make cost of doing business more expensive because you're going to be getting funds that are more expensive. So businesses have to do a lot of adjustments to survive, because it's going to be a bit more challenging. With inflation at 21% and our debt service ratio, meaning that how much of our revenue do we use to service our debts. As at last count, there will be different figures, but we know that we are servicing more than we earn. So that means that we are using more of our revenue to service debts than using it for infrastructural projects. It was even as high as probably 110%, which is quite worrisome. So the challenge now is that the government has to look for ways of increasing the revenue basket. The lowest hanging fruits for increasing your revenue basket is by increasing taxes. So next year, people have to
pay for more.
Pay for increased taxes on you and I that earn salary. Our pay will go up. For companies that run businesses, their company income tax will go up. For fintech businesses, their fintech taxes will go up. So, it's going to be a bit more challenging. And the reprieve is that because we depend so much on FX, 90% of our revenue is generated from crude oil, and hopefully with the Dangote refinery opening next year, it might reduce the pressure on the FX. So Dangote refinery is 650,000 barrels, and at that, instead of importing a lot of PMS, that figure will drop, because 650,000 of that will be produced locally here. That might reduce the pressure on FX, and hopefully our exports. CBN has an RT200 scheme, meaning they want to raise $200 billion from exports from Nigeria. That would also help grow our FX revenue. If all these things go well, it's a positive approach to help us reduce our dependence on imports and also FX that doesn't exist, because our reserves as our last count is $38 billion, and that was a sharp drop from the beginning of the year. It was 49. So a lot of our reserves are being used to defend our debts, which are servicing to international institutions, even locally, and also to fund the imports that we bring into this country. So if we export more, there will be less need for FX to bring in things into the country, which will give a balanced equilibrium for the economy. For financial institutions, they need to be more innovative. There's competition, there's fintechs, you mentioned one fintech company now that you spoke to the MD earlier. So it's not business as usual. You can't just sit down in your office and cross your leg and wait for the customers to come in. You have to create solutions that customers need that will onboard them into your business. If businesses are not very creative, most of them will possibly pack up next year. So for us, even at Lotus, we started looking at areas of creating value for customers, because if you solve a problem, you've created an opportunity to be a millionaire. You can only get rich by solving a problem. Uber solved the problem. Airbnb solved the problem. Google solved the problem. Amazon solved the problem. And that's why all of them are smiling to the bank. So if the banks don't begin to think of solving problems in the economy, most of them might go out of business.
Okay. I mean, so I think a good place to end this interview is, we need to create value. Yes. We have to create value. Thank you very much, Sheson, for a very insightful and educative interview. Thank you for your time. Thank you very much for joining us on today's episode. We hope you enjoyed it as much as we enjoyed bringing it to you. You can catch up on other episodes of the Distinguished Guest series and other content on our LinkedIn, website, and YouTube. Thank you very much once again, and we look forward to seeing you. Have a good day.